Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today we will continue with our technical analysis on Tesla. At the end of the video, I will also add on Amazon, Shopify, and if you are interested, I will also add Facebook. First, let's take a look at the QQQ and the Spider just to kind of gauge the general market out there. If you are new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. So today is October 5th. At the time of this recording, we are around 3:30 Eastern Standard Time. So we have about half an hour left before the trading day ends. Here I see that the QQQ has a almost like a bullish engulfing at this point, even though the volume is only 91%. Recall yesterday the volume for the QQQ was over 150%. So today, even though the price action is green and the predominant volume is buy volume here, the volume overall is not super high. If we are looking at the weekly candle, once again, just based off of the last 2 days of the week, we can see that this is a pretty bullish candle right here, and if QQQ ends the day at 359, which is only about another $1 from here, it would make a bullish hammer and possibly a reversal there. SPY paint a slightly different picture. However, even though the volume is also below 100% at this point, it is a fairly bullish candle. This, if you're familiar with a pattern called one white soldier, this is exactly that pattern right here, and it is a trend changing pattern. So as the S&P 500 has been moving down for the last few days, this particular daily candle here signals a reversal. So based on this candle pattern alone, I'm looking at a potential reversal for the S&P 500 in the coming days. Let's take a look at the weekly candle. So see, the weekly candle here, unlike the QQQ, paints a very bullish picture, and it does look like this is a bullish hammer in the making. We have half an hour left, but if the Spider ends the day at 434 or higher, that is a bullish candle, and on the daily, that is a reversal candle. So keep that in mind as we continue with our subsequent analysis. Here is Tesla daily chart. At the time of this recording, Tesla is at around $782, up just slightly $1.29 from the day before. The 50 days SMA is now adjusted to 726. The 200 days SMA is still at 702. Volume is at 90%. So yesterday Tesla ended the day at around 172%. So once again, 90% is not low, but it's not super high either. Coupled with the fact that Tesla just announced Q3 delivery result over the weekend, the fact that the price action is muted today and the volume is just about average is not super encouraging for the bulls. Once again, this has nothing to do with the long-term fundamental of the company. If you are listening and you are a shareholder, please do not think that it's doom and gloom for your Tesla shares, and do not wonder whether you should buy, sell, or hold. This is not a sign for selling at all. However, on a short-term level, this does signify a consolidation candle that potentially allows Tesla to move down further. If Tesla ends the day just right around this area, then today's candle is not really signifying anything bullish. If anything, it confirms bearish in my mind. So that's something to think about if you are holding on to short-term call options in Tesla. Let's take a look at the hourly chart. So on the hourly chart, actually I want to go with the 15-minute chart first. I want to highlight the price action within the first half an hour of the day. If you notice, Tesla does this a lot. It would almost engorge within the first 15 minutes to half an hour of the day, and then it start retracing back. Once again, 793 is a relative resistance at this point, and we observed Tesla been moving between 793 and 777 for a few days in a row now. Going back to the hourly chart here, we could see that Tesla been moving along the consolidation level of the upper end of 793 and the bottom end at 777 for a little while. The next level of support that I can see is 767, which is an hourly support at this point. So let's see what Tesla wants to do in the next couple of days. But if it for some reason breaks through 767, then we're definitely heading downward. For right now though, there's a little bit of an RSI divergence here on the hourly chart. So while the stock is moving sideways at these two bottom points, RSI tips up a little bit, so it could potentially bounce again in the morning and may sell off again. The trading range for tomorrow is on the upper end 808. The middle pivot point is 785, which is right around where it is right now, and the bottom pivot point is 772. So the range for tomorrow is narrowed compared to the previous days, but it is nonetheless there for those of you who trade short term. I'm gonna go back to the daily chart here. I wish that Tesla would have a one white soldier pattern like the S&P 500, but unfortunately that is not the pattern that I see here. On the daily, I still see that it is overall trend is still bullish, especially if you go to the weekly, which we'll get to in a little bit. The overall trend is still bullish, but within the last 2 days, the price action is definitely bearish. I'm looking for Tesla to retrace back to about 767, 764 area. The next support would be 761. And then you get to 746. I wouldn't be surprised if Tesla hits 746 by the end of the week and start moving sideways from there and then go back up just in time for Q3 earnings results. Here's the weekly chart. So with the last 2 days price action, the candle looks pretty bearish here. I still want to wait until the end of the week to see what Tesla will do. Now, if Tesla ends the week in the 750 range or below, that is a bearish engulfing on the weekly candle, and that is not good, at least in the short term. For right now, the week hasn't ended, so we still have a lot to look forward to. I want to move on to Amazon, and as always, we start with Amazon weekly chart. As I mentioned, Amazon still has a weekly bull flag. But on the weekly chart, if you remove all of these lines, you see a head and shoulder on the weekly chart. So this is a very bearish sign for Amazon in the intermediate future. So this is probably a couple of weeks out, and we're looking for Amazon to fall down to about $3,022, potentially $2,888, and Amazon should not fall outside of $2,800 in order for the bull flag to still be viable. But it looks like it's gonna fall within the next few weeks or so. The daily candle here, we have a decent bounce today after a very steep move yesterday, but this is also just an inside bar from yesterday bearish engulfing. So for all intents and purposes, this might just be a consolidation for a continued fall. You can see that the 50 days SMA has now been moved down to about 33.50, and the 200 days SMA is 33.07, and Amazon lost both of those, trading at 32.38. So that is not necessarily a good news for the bulls at this point. Amazon does have a gap from the last earnings, from 33.47 to 3,600. So it will eventually fill that gap, but I'm guessing the next few weeks it's gonna have to be a little bit more bearish. On the daily chart here, you can also see the head and shoulder pattern, even though with this gap down, it's kind of hard to connect the picture, but here's the left shoulder, here's the head, and here's the right shoulder. So here right now, Amazon is at a temporary support of 31.89, which is a decent support, but it could get to 31.38, and if Amazon loses 31.38, then the next level of support would be 30.40. And it could get all the way down to about 2,900. You can count on me being a buyer at $3,000 or below. I've been progressively buying Amazon for the last couple of days, but I'm waiting for the bigger drop. And then when Amazon gets to an extreme level of oversold, then I could potentially take a call option a little bit further out for Amazon to move back up. So that's my general thought there. For the trading range for tomorrow for Amazon, it is between 32.64, 32.34, and 31.75. All three price levels are below 50 days SMA, 200 days SMA, and particularly below 50 weeks SMA, which is the yearly average for Amazon. So Amazon is definitely in bearish territory right now. I would not be holding on to any calls at the moment, and I am waiting for any opportunity for an oversold condition to spot a potential reversal. Here's my daily chart for Shopify. You can see that the head and shoulder pattern played out pretty nicely, which I mentioned in my video about 2 weeks ago, that I anticipate Shopify touched the 200 days SMA. At the time it was around 1293. It is now 1309, in the same ballpark area, and it did touch that yesterday, broke through that level and then bounced back up, and trying to hold on to 200 days SMA. Today, the price action is also pretty bearish. It started the day, went all the way up to fill the gap from yesterday. The high point of Shopify was at around 1354, and it has been retracing back and losing almost all of its gain for today. The price action today, based on this candle alone, is pretty bearish. So if Shopify already filled the gap that was created yesterday and trying to hold on to 200 days SMA, it might just consolidate from here, or it could lose 200 days SMA again, and it could lose it for good. And in that case, the next support level would be 1266 and then 1204. If Shopify gets anywhere below 1200, I might consider buying it. For right now, it's still a little bit too expensive for my taste. Let's take a look at the 30-minute chart here. Shopify is the stock that I tend to trade short-term if I trade short-term. Yesterday, I contemplated with this gap trade because the gap was really huge, but I didn't get in, and fortunately I didn't, because Shopify never filled the gap. Today, on the other hand, it started really strong, filled the gap created from yesterday here, and then retraced back down. So Shopify is trying to figure out what it wants to do right now, but I think that right now everything favors the downside more than the upside. The trading range for tomorrow is on the upper end, 1347. The middle pivot point is 1330, and then you have 1286, with 1309 being the 200 days SMA, so we have to watch out for that. There is also a resistance at 1362. And lastly, let's take a look at Facebook. As you can see, that Facebook hit a all-time high of $384 back in early September, and since then it has been moving down. And since then it has been on a downtrend. It lost 50 days SMA at 362. It is heading down to 200 days SMA, which is $315. Today, Facebook seems to bounce a little bit. The volume is over 200%. We still have another 15 minutes to go, so that is really good volume for Facebook. But I still don't think that Facebook is ready to bounce yet. It stopped at a decent support at 328 and then start bouncing from there. But I think Facebook will eventually get down to 315. If the market condition is still bad, then it probably will get there before bouncing. Now, as I mentioned earlier, the S&P 500 does have a bullish pattern, or at least a bullish reversal pattern. Even though Facebook is a technology stock, if the S&P 500 bounces hard, it could potentially lift Facebook, as buyers could be coming in, and Facebook would be one of the first companies they'd be buying. So this is it for this video. I hope you find the information helpful. comment down below if you'd like my analysis on any other stock, or if you find the non-Tesla stocks are helpful. I know the vast majority of my audience love Tesla stock, so I definitely keep Tesla in the forefront of my mind, but I also want to analyze on a few major stocks that could potentially have an impact on Tesla or the market overall. So hopefully the information is helpful to you. Until the next video, bye.